officially Sourceman here. It's January the 7th, 2025. First of all, thanks to the sponsors. Very interesting day today, mostly because of comments coming out from Trump, but let's look on at the market. Yeah, I mean, gold, silver doing quite well. Crypto is, I mean, getting its teeth kicked in a sense, and markets did a U-turn. So volatile day, and again, that's why I it highlights the fact that you can't really look on a day-to-day basis, because obviously, I mean, at this point in time, everything looked great. People would be bullish, especially the ones who are short-term focused, which is basically everyone. Then something happened and boom, goes down, and actually the futures are red. All of a sudden, the same people who are short-term focused, now they probably think that it's going to go down tomorrow. So probably bought here and are selling here, and who knows, maybe it's going to be the complete opposite tomorrow. I mean, I just almost assume that there's going to be a coin flip. I mean, if metals are up today, I kind of expect them to be down tomorrow, and if they're down tomorrow, I expect them to be up the next day, which at least makes you a bit level-headed, and you don't get surprised if you have that kind of, expectations that, the weather is going to change, so there's no point really in trying to, buy high and sell low, because if I sell low, I'm gonna be looking stupid tomorrow, and if I buy high in the short term, I'm gonna look stupid tomorrow. So you have to, force yourself to have that long-term perspective. Anyway, I mean, just the stuff that's been coming out lately is kind of amusing. Central banks keeps buying gold. The U.S. puts in bids for Canada and Greenland and the Panama Canal. And of course, meanwhile, 95% of people are YOLOing in digital tokens. I mean, I had this conversation yesterday, I think, with some people about, how hard the mining sector is, how hard it is. Basically how hard it is to find a mine, put a mine into production, and the capital markets are not really there, at least not in a broad sense of things. I mean, there's obviously some companies that are enjoying, access to capital, the better stories, but it's not broadly based. And from what I've heard, in Vancouver, which is supposed to be at least the junior mining capital of the world, and mining is going down in interest there and has been for quite some time. And it's, I guess, a lot of deals for tech, biotech, crypto, yada yada yada, which just goes to show, I mean, that's in a sense incredible. It's like, okay, if a lot of the mining capital is focused or concentrated in Vancouver, and it's still not the biggest piece of the pie even in Vancouver today. I mean, that's just incredible. And especially I mean, that just makes me, I mean, the more people say how crap it is, how low the interest is, yada yada yada, it's like, in a sense, I agree with it because those are facts. But that also makes me, as the contrarian streak, it's like your antenna goes up. It's like, Christ, I mean, it's getting better and better and better from a contrarian perspective, because let's face it, I mean, mining is one of the few industries that are actually required for everything. I mean, it's literally the basis of the S&P 500 and all the crypto mining rigs and I mean, everything we use in life. I mean, that is the basis of civilization, and that is at record low interest, which is absolutely crazy in a sense, because it's the only one of few actually strategic sectors. I mean, if mining went away, everything would stop. So here's the main event for today. There's talk about, and I saw some comments a few days ago. Apparently there's a new news conference, or a recent news conference, I mean, in the wake of Trump saying that, you know, I would like, you know, for Canada to join the U.S. and be a, you know, the 51st state, etc. So I don't know if this is completely, you know, hot air in a sense. I mean, I think there's some truth behind it, because it makes sense. I mean, I've had this thought many times before. I mean, the U.S. with, I don't know, 350 million inhabitants or whatever, I mean, they are the biggest economy. They have a lot of stuff going for them, but at the same time, Canada is like a resource battery in a sense. I mean, huge country. I mean, huge endowment in terms of natural resources, which is kind of, you know, it's ironic that Canada itself doesn't seem too focused on mining, and still, I mean, why would Trump even air this idea? I mean, I think it is on the same lines as, you know, Russia. When Russia supplied Europe with cheap gas, I mean, it made Europe flourish, especially the German economy. And now, I mean, the European economies are taking it on the chin. France is looking really bad. Germany is looking really bad. So, I mean, and of course, Russia is not that great in terms of innovation or anything really, I was going to say. But they have a lot of natural resources. And when you combine the abundance of natural resources, the cheap energy, with the innovation, etc., of Germany, I mean, it created a powerhouse. But when you take that away, I mean, it has disastrous effects for Europe. So, what I'm saying, I'm not saying I would be happy as a Canadian. I mean, I talked to some. It's like some would be happy to join the U.S. and some would be, I mean, basically it's like no way. I would probably be in the camp of no way. If I were Canadian. But my point is that it kind of makes sense, and I think this just highlights, especially, I mean, when you talk about Greenland and the Panama Canal, I mean, all of that is like, you know, geopolitics, infrastructure, transportation, and of course, what does Greenland have? Few inhabitants. You don't want it for the human capital, but it's a huge area with probably abundant resources that haven't really been exploited, and that goes for oil, gas. I mean, you can find articles. I found one from 2021 with the title, like, you know, something along the lines of the battle for Greenland's resources is heating up, something along those lines. Of course, you can have it as a, you know, a base in a sense. I mean, just to have a, you know, control it physically, because then you, I mean, control or have an easier time controlling the North Sea, etc., etc. But it's like, okay, what does Panama? Obviously, very strategic, because it's, you know, there's where you're shipping goods through, and that's why what is the name, the Suez Canal, for example, and stuff like that in, you know, in Middle East, Mediterranean area. That, I mean, everybody's probably heard that, you know, if the Iranians would block, I think it's the Suez Canal, for example, I mean, oil could spike, you know, by 50% overnight. I mean, that's power, of course. And also, again, what does Canada and Greenland have in common? Probably, well, a huge landmass, and one would expect there to be huge natural resource endowments. So again, it makes sense that if you have a big consumers like you, if you would own an area, if you would bolt on Canada or Greenland, whatever, and you could basically supply all the commodities you need, and you control that, of course, that would basically shore up the strategic picture for your self-sufficiency, the supply chain. And that's, I mean, this is in the wake of China, you know, putting on antimony bans and yada yada. So I think it's just, again, ironic, the fact that, it seems to be an increasing scramble to, like, oh, we need to, especially also in the wake of all the news about the data centers that are going to get built. I think there was a comment that Trump said, oh, we're going to put, invest 20 billions into data centers, and Microsoft had that headline that they plan to invest 80 billion, and that's just one company. And of course, all of that requires metals. Every semiconductor, copper for electrical wiring, and all of that. All of that, the arms race in AI, all of that requires a lot of metals. And of course, to wage war, you require a lot of metals. That's why some people working in the Sudbury region during the Cold War thought that they would be the first area to get hit by a nuke if the Cold War turned hot between the Soviet Union and the US, because if you shut down the West's nickel supply from Sudbury, then it's going to be hard to make tanks and all of that to fight the war. So I mean, that's what's so ironic about this, because if you talk to most people and everybody who says that mining in Vancouver is actually going down in importance, whatever, and it's crypto that's hot and all that, AI and whatever it might be. I mean, I have never been more bullish commodities, and I think these comments out of Trump just highlights. I might be wrong. Then there's other reasons for it, or it's some, he says it to, whatever, to create some chaos, or somebody wants him to create some chaos, or basically stir up things between the Western partners or something. But at the end of the day, it again kind of makes sense. Same as why Germany was able to flourish thanks to the natural resources of Russia, and Russia were able to get paid because the industrial prowess of Germany, for example. So it was in a sense, I guess, a win-win. And still, I mean, that of course goes over the heads of most people, and that's why I find it so funny when Trump and I've seen even Russia. I think they're more trolling. It's like these CBs say, oh, we or these countries like we're weighing the idea of adding Bitcoin to as a strategic asset. I mean, first of all, there's nothing strategic about Bitcoin. What do you actually control? If you have Bitcoin, does anybody really need it? No. It's not strategic at all, really. I mean, one could say that, well, gold is not strategic because it's not used that much. I mean, it's mostly just hoarded. It's like, yeah, but there's 5,000 years of history, and it's nice to look at, and it signals rich, wealth and all of that. So it has properties that are alluring to the human psyche in a sense, and it's been ingrained in the world's culture since the dawn of civilization. That's the only thing, basically, except for, I guess, silver as well. So gold and silver, it's not like, oh, we just picked up some random thing. No, it's the few things that survived and held their purposes for 5,000 years. So it's like it gets shown. You can just that's why I find it funny with Bitcoiners, maximalists. Like Bitcoin has been around since 2008, and people just give it the attribute of store of wealth. You can't just. I think a store of wealth is supposed to prove it is a store of wealth before it can be considered to be a store of wealth. Not that you just invent something and just, hey, this is going to last forever, or this is going to be valuable in 100 years. It's like, well, how do you know that? No, I'm going on a leap of faith here. Meanwhile, gold has shown and silver has shown that that's been true for 5,000 years, and still people doubt it now and then. Which again just kind of proves the point. That it's like, even with doubt and all that, it has proven to prove the disbelievers wrong, let's say. So I mean, this is what it comes down to. So my bullishness for commodities, especially in light of the these comments, for example, from Trump, it just highlights the fact that at the end of the day, the only there are haves and have-nots, and the basis for everything are commodities. The dumb, plain, simple commodities that all the new technology requires to even work. I mean, without commodities, you wouldn't have one data center that can work on AI, for example. So again, at the end of the day, it's the least common denominator. It's the basis for everything. It's the base of the pyramid of civilization. And Bitcoin is not that. If Bitcoin disappeared tomorrow, nothing really would change except for there would be paper losses. But it's not like, then we would go back to the Stone Age or something, or what has actually Bitcoin even contributed so far? I mean, except for money laundering and stuff like that. I mean, it's not that like the world has been revolutionized because there's Bitcoin. Yes, some people have made a lot of money on paper, but a lot of people have made money on paper in, Fartcoin and Dogecoin and whatever, Ethereum and stuff like that. So it's not unique. It's like, now everything has been revolutionized because there is Bitcoin, and nobody even knows if it will still be around and will be used. All we know, it's absolutely not strategic. That's the thing. That's why I find it so funny when you see these headlines. Strategic Bitcoin reserve. I mean, let's say shit hits the fan, even more so. Who the hell is gonna sit there? It's like, I mean, the world starts to crumble, and it's like wars are popping up. It's like, I gotta put everything in Bitcoin. Who would do? First of all, nobody in history have had that like knee-jerk reaction, and it's not even been tested in such an environment. But it's like, I feel if I would have 1% of my wealth in crypto, I would feel like a huge risk taker, especially because the opportunity cost is owning something real that the world actually needs and is actually finite and all that. So to me, it's a non-starter. It's like I can't get myself. Maybe if crypto is down 70% or something again, the next big flush. But I cannot get myself to put $1 in crypto over real assets, because real assets like that's to me that's a winning lottery, winning ticket, just waiting to get cashed in. While crypto, I think, is a losing ticket, just waiting for gravity to set in. But that's the market, and of course, I mean, it's like I try to highlight that. I mean, if Dogecoin can reach $75 billion market cap, real assets can be cheap, because Dogecoin was created as a joke, and Fartcoin is obviously a joke as well, and that still had, I think it reached $1 billion. I mean, think about that. You could look at a junior that doesn't really have anything. If that would reach 100 million or something, even though they might have potentials, like they have some land package, so yes, there is a 1% chance they would actually have something of value at the end of the day. People would say that's crazy. Nobody would. No one rational would buy that. But at the same time, you see stuff that's like literally jokes worth billions or many, tens of billions of dollars. So it's like, it's upside down land we are living in, and I try to keep my feet firmly on the ground. So the more people neglect resources, which is probably, we're at peak neglect. It's starved for capital, and nobody, really cares about it. And still, it's that's the irony of it all. It's like the one thing that everybody needs is the most neglected thing, and that's just crazy to me. And like, people can't seem to put it together. It's like all this AI and crypto and whatever. It's like none of that would be possible without continuous supply of metals and minerals. Continuous supply, and no mine lasts forever. So you can't have a never-ending bull in S&P 500 and crypto and AI without metals. But let's go through some comments about companies. Altamira hit by I think it's been in I've talked about this before, and Quinton recently talked about it as well. We're still waiting for I want them to drill a lot. I think they're doing more groundwork right now to come up with even more targets. So I do think Altamira has one of the more interesting and high potential property packages out there with the amount of targets, etc. But it's not considered exciting because there's no drill in the grounds. But that's sure to come, I think. I wouldn't be too surprised if they come up with some kind of, if there was a strategic that took down some of the next placement, for example, because I think mid-tier or major could appreciate the amount of targets they have and all of that. They have huge land packages, real district scale opportunities. Irving, I'm revisiting Irving because what I like is like when for me personally, for example, I had higher hopes at OMUI with that buried system, and of course it helps that they're backed by Newmont and all that, so you're not crazy. It's like the world's largest miner has been saying, and is also currently saying, especially at Yamagano, that's like, hey, there's Newmont size potential here, which is obviously the highest there is in the sector, because they have the highest threshold for critical success. And now it's down to 20 million in market cap, and I'm probably going to try to find out more about the deal on Omu with the Silica Sinter, etc. It would be pretty nice to, I don't know what kind of revenues, etc. This here, earn 75% interest. Again, I don't know what the potential cash flow could be from this, but I think, let's say you have a almost perpetual supply of smelter flux just from this. So it's like, okay, if 20% of that is I don't know. Again, I don't know. If it's 2 million, whatever. It's like, imagine 2 million. That's PE of 10. Let's say it could go on for 50 years. For 50 years, hey, that would be pretty nice, even if it's just a smelter flux operation, and then you get everything else for free in that case. Including the interest in Yamagano, which Newmont I think is currently drilling. So I got to look into that more because I don't actually know the details. But this is the stuff I kind of like, especially after around what was I going to say? Tax loss silly season, because stories that get kind of forgotten, neglected, or it's like they didn't play out the way people thought it would play out, including myself, closer to the highs, then soon, as time passes, and it's like the interest goes down and down and down, and you have tax loss selling, and then you have trend following and all of that, so everybody's just looking at the share price, and it's like, okay, well, there's nothing happening here, etc. That's when I think you should really go and revisit some cases. It's like, because price is the only thing we know at any point in time. Let's say Irving was at 100 million, and it's like the idea was, hey, I think this could be worth 500 million, whatever, from OMUI, and that has so far failed to show 500 million worth of value. So the exploration results weren't as good as you would have hoped, or they didn't make so far like the slam dunk discovery, let's say. But now there's a new reality. So the new reality is that it's a 20 million market cap. So then it's like, even if you think you came up with I think there's a pretty good case, shot that this could be worth 100 million or 50 million or up to 300 million, depending on Yamagano. etc. All of a sudden, it's like, okay, in a sense, very different story, because it went from, let's say, OMOE being the focus to now it's Yamagano is in play for real, and you have the advancement of the smelter flux. And all of a sudden at 20 million, you have a completely new case with the different, basically success parameters or if you understand what I mean. So it's like it might be looking very differently. That okay, it's not about OMOE per se. It's more about a smelter flux operation plus a free option on Yamagano and anything else. So all of a sudden, same company, totally different price, but all of a sudden, hey, maybe a good case has materialized. That's why I try to, and I have to, basically also, in a sense, revisit NOVO as well after their cash injection and these new targets. I spoke with someone who also is an investor. It's like, I've seen cases that, the main case didn't work out. People got disgusted with the stories. Share price took a big hit, especially in a bear market. Yada, yada, yada. But something has happened and the market doesn't really care about it yet. Because everybody's disgusted by the case. It's the same, well, kind of same for NOVO, where it's like almost hasn't matter what they put out in terms of news, the market doesn't react. So it's like you're gonna need something material to get people back to these stories, because there's so many people. The reputation and the feelings connected to the stories are so negative in a sense. But I could say the same was for the gray mining. The gray was down to, I think, 5 cents. Before it bottomed, and later they actually made the Hemite discovery. So now in hindsight, it's like, oh, the gray, top quality name. I bet that a lot of people were not agreeing with them with that statement when they were at 5 cents. Now it's what, at $3, or it got bought out for. Okay, 1.82, 4. I think it was getting sold for 4.5 billion or something. We can look at it actually. Down here it's like low of 5.5 cent, 4.5 cent. So basically, in a sense, this was all. The gray was kind of a failed story. Going down to whatever it bottomed out at, 4.5 cent or something. Oh, even lower than that, 3 cents in 2017. And now it's at 1.82. So you never know. It's like, anybody that would have been just so disgusted by the performance of the gray, and it's like, I'm never going to look at that stock again. So and they keep prodding along. It's like, okay, they're drilling here and there, and then all of a sudden they make a discovery, let's say at the gray or at Hemai. And of course, at the time you could have known that this was going to be a 10 million ounce plus deposit and get sold for 4.5 billion. But it would obviously at the same time be a mistake to be that colored by the past that, oh, I don't even care what they put out now. I don't care how cheap the company is, because I'm not going to look at it. And if somebody did not have that negative experience and they just looked at the price, and when they, let's say, made a discovery at Hemma, it's like, oh, this is actually looking pretty good, especially at this price, if this turns out to be a discovery. So I like that bet, so I'm going to put 1% of my portfolio or something in it. That's the thing. It's like we want to avoid all trap falls or like psychological errors we do as humans, and that's including being stubborn about, okay, well, I lost money in this, so I'm not going to look at it again. Because you never know. Again, same case at much lower levels. You could have lost money in a case. It goes down, again, lose on paper, whatever. You sell and it goes even lower, let's say. But something happens, and if you were rational, you would take advantage of it. But you aren't rational because you have such a bad emotion connected, let's say, to a case, so you refuse to revisit it, let's say, and then you make a mistake by not acting when you should because you're colored by the past. So it's like that's one thing I acted because I've seen that happen, and that's happened to me as well. And the same goes for the flip side of the coin is like some stories that you didn't buy them at some price, they go up, and you refuse to buy them because you didn't buy them at a lower level. And now you see people celebrating in the chat or whatever, and some say, brag about, oh, I got in at 10 cents and now it's at 32. So you're like, well, I'm not going to pay for that guy's lunch. I'm not going to invest because I thought about investing at 10 cents as well. And now it's at 32. That's all. I mean, what someone else has made has no bearing on our portfolio. If it's a good buy at 32 cents, it doesn't matter if somebody went all in at 5 cents. Because there's also a lot of the time, stories are better at a higher price, assuming, news has come out that backs it up. So I mean, because I've sometimes invested in a company and I'm like, okay, I'm taking a position here at, let's say, 80 cents or something. And somebody says, oh, welcome to the party. I got in at 40 cents. And I mean, he's obviously bragging and it's like implying and trying to basically highlight that, hey, I mean, now, I'm already up on this, so I'm smarter than you because I got in earlier. And without telling him that, or, bursting his bubble in a sense, in my mind, I'm like, well, actually at 40 cents, this was a sell. So I think he made a poor buy at 40 cents. Now it's at 80 cents, and now it's actually a good buy. So he's bragging to me, or to anybody, really, and, stroking his ego in a sense. Whereas I'm just thinking that, hey, I mean, this just proves that I think you're not that good of an investor, let's say, because I can't see how you thought it was a good buy at 40 cents. Now with this new information, the value has gone up from, I mean, at 40 cents, it might be, let's say it was worth 40 cents. So there's no case there. News happens, all of a sudden you think it's worth $1.5 and it's at 80 cents. So all of a sudden I see, oh, now it's undervalued, but it wasn't undervalued at 40. But then something happened, and then it's actually a buy. So in that case, I'm doing a better buy at 80 cents than he did at 40 cents, even though when I buy in, he's up 100% on that very story. So that's also, again, and I'm afflicted by that as well. I don't when I miss something, especially when I planned on kind of buying something and it goes up, then I'm like, because I think it's like you're kind of mad at yourself in a sense, and then you don't want to feel dumb by like buying in later. But that's why it's like we should always have a strict risk-reward, price-to-value focus. Because yes, let's face it, it might have been a better buy at a lower price, assuming no news came out, and then it goes up. It might still be a good buy. And it's like, yep, you left some money on the table, perhaps, by not buying. But if, I mean, let's say you had a loose idea, it's like, hey, I think this like expected return in this is like 170% over next 2 years, and you don't buy it. It goes up a bit, and now it's down to 145% expected return in your base case. That's still 145% expected return in 2 years, which is absolutely insane. So I mean, it's of course on a risk-adjusted basis, it's a clear buy, unless you see something that's even cheaper. Anyway, I gotta dig into this more. Goliath put out news today, and not super shocking. It's like, I mean, the headline. I'm not super shocked by the reaction. So I mean, intercept several holes inclusive 130 grams per ton AU equivalent, or 1 meter. I mean, that's a super bonanza. And 33 over 3.1 meters. So it's like over 1 ounce AU equivalent over 3.1 meters in bonanza zone. Both zones remain open. I mean, that's the great thing. It's like this was from the shorebed zone. That's the original, the original main target, and now Bonanza zone is stealing the show, and they hit over an ounce per ton. I mean, as always, their news releases are extremely fat. I haven't even had time to go through everything yet. 1, 2, 3, 4, 5 holes. Yeah, okay, one was like that you can ride. 3 point. I mean, not even this is that bad. I mean, 3.1 meters of 5.64. Is that the worst one? 4, 4.7, 5, 5.8. Yeah, so I mean, all these holes, every single hole hit, pretty good to stellar mineralization. But I think the reaction might just show that, and we've seen this in some other cases as well, where it's like in this environment right now, there's a lot of emphasis on getting rich quick. I mean, the worse people's portfolios have returned, typically you want to, as quickly as possible, make it all back. So you're looking for just the very next catalyst to go up, and then you sell. Go up and sell. I mean, basically it's like, I'm going to get into this, that's going to go up 20%, then I'm going to sell, and that's how I make it back. And there's always pretty much always some company drilling. So you have people just jumping from catalyst to catalyst, for example. Basically. Because okay, with that said, I haven't dug into it enough, but it's like there's a lot of assays still to come, and I mean, I'm not gonna chastise this guy, but it's like lots of hits of decent grade, but it seems to be concentrated in narrow veins. Sold half my GOT position, redeployed it back into FDR. That's actually getting some traction. I should have left in FDR in the first place. I mean, that's basically, I see what we're seeing here. So they put out 5 holes. Did the entire value of Goliath, long-term value and potential of Goliath, go down 8% on those 5 holes, which were good holes? I doubt it. I doubt it very much. But then you have, again, just highlighted by, it's like, okay, this news comes out. He sells 50% of his position, which I mean, I don't know the magnitude of it, but redeployed it back into FDR. That's actually getting some traction. I mean, there's no real. I think, again, I think he's looking at the price reaction, comes up with a narrative that fits that, sells half his position on 5 holes, redeploys it back to FDR, which is Founder Metals. That's actually getting some traction, and then hindsight investing, I should have left it in FDR in the first place. So the question is, did half his case for Goliath was based on these 5 holes in that case? In some way, or you know what I mean, but it more looks like, okay, he was betting on selling anyway, or he was betting on buying Goliath because it's going to go up on the next news release, and then he's kind of then he wants to sell because I mean, if I look at Founders Metals, it's like there's and I might be wrong, and the funny thing with Founders Metals, I was supposed to be in the private placement pre-IPO. I think that was done at, I don't know, 40 cents, 30 cents. So I missed probably an 8-bagger at least, 10-bagger, and then plus the warrant. So I probably missed out on a 15-bagger but it took such a long time to close the placement. So I actually found something else to put that money in. And of course, I mean, now it looks like a, huge mistake. But at the same time, at 505 million market cap, I think that's crazy high. I mean, I am not buying Founders Metals because of the price to value. I mean, I would rather own First Nordic than Founders Metals. And despite, I think First Nordic is worth more than Founders Metals, and yet First Nordic is at 90 million and Founders Metals is at 505 million market cap. So I'm not saying this can't go higher. That's not what I'm saying at all. But to me, it goes down to risk, reward, and price versus value. And I don't think, I'm not 100% sure, but I don't think they have anything that's, what they've hit so far, I don't think it's slam dunk that's actually, worth mining in a sense. And still they have a $500 million market cap. And then, it kind of makes sense, because like if you look at, it's a very hot stock, very tight stock and all that. And they get Chris Taylor in from Great Bear. So, they have the narrative and share structure and, tight shareholdings. FDR has a lot of things going for it. It kind of reminds me of what Dave Lowton said about G Mining. That G Mining had no real business of trading as high as it did, given the asset that they held. But it had the network effect, it had good backers and all of that. So it simply fetched a much higher valuation, not because it was worth that much more than if somebody else would hold it, but for reasons other than just what the actual value of the project was worth. Because in itself, or you can look at a valuation in a vacuum, but to me or any stock picker, we want to find the cheapest ones, right? In that sense, Founders Metals might be a buy today. I have no idea. Maybe it's still cheap. Maybe there is positive expected returns. Maybe the risk reward is still favorable. But if I compare that to First Nordic, for example, I just see there's, to me, without being an expert on FDR, it doesn't even come close. So even if Founders Metals is, quote, a buy, I'm not buying it, because I think there's even better risk rewards out there. But yeah, so back to my original point. No talk about price to value, risk reward. It just seems that, he made some comments about seems to be concentrated in narrower veins, and these are just 5 holes again. That made him sell half his position and redeployed it back into FDR. That's actually getting some traction. Do you think this guy has really any idea what he's doing? I'm not saying, it's a hard sector, so I'm not like bagging on this guy, but I want you just to see how, the majority of people operate. You sell half a position, but there's no talk really about, price to value, or, it's more like, he wanted to have a quick buck in this, then he sells half and basically promotes FDR. And, use some hindsight investing that, I should have left it in FDR. Why? Because these 5 holes were, whatever, good, but market didn't go up. You know what I mean? So it's like, I don't sense a strategy behind it. It seems that it's, again, most catalyst, you put the money in the thing that has been running. I bought something I thought was going to run on the next news release. It didn't, so I made a mistake. I should have just kept it with, in my opinion, overvalued company, which I consider FDR to be on a relative basis compared to what else is out there. So I think it's just a good example. This is why, what I'm trying to convey here. Most people don't really have a strategy. And a lot of people, especially right now, they are hunting, they're catalyst hunting or momentum trading or whatever you would like to call it. And then, of course, you make up you trade kind of based on your feelings, and then you make up a narrative that fits that, in a sense. So do I think Goliath's long-term value went down 8% with these 5 holes? No, I don't. But again, I think even the sentiment in the sector and everybody's looking for quick payoff, and the time horizon for investors have never been shorter. So if people believe there's or if the consensus is that the next news release is probably gonna be good and lead to a pop, you will have people piling in there, and who plan to just not get rich quick, but you know what I mean. Make a good return in one day and sell and do it in the next case. Basically, just an endless stair-stepping higher, just jumping from catalyst to catalyst, and in their mind they're like, oh, I'm gonna make a lot of money just from being in every, just jumping from company to company, for the very next catalyst. West Red Lake Gold put out positive pre-feasibility study for Mawson Gold with 350 million after-tax NPV and 70 million average annual free cash flow. Production start Q2 2025. Average all-in sustaining. I mean, it's not a super low-cost mine. I'm not 100% sure if they are. Initial capital is low because. Where's the initial capital? $44 million CAD. I'm not sure if all of that is left to deploy, or they basically spent most of that investment already because they've been doing a lot of stuff. So I haven't had time to really dig into this either. Gold price 2,200, and then that's when they expect. I think they expect. Yeah, okay, 70,000 ounces per year. What was the? 70 million free cash flow from operation. Blah, blah, blah. I assume that's based on $2,200 gold. So obviously it could be higher. So I mean, the idea, let's say it's more like 85 or 90 million annual free cash flow. The market cap is right now 178 million. So I don't know what the fully diluted number is and how much they have left to spend, but let's say it's up to whatever. Let's do it with like 250 million in fully diluted market cap or something. When all is said and done, assuming, I mean, if this holds up, let's say, and you pay, let's say, 250 million today, fully diluted, and the gold price stays here, and the margins are, the costs are in line, so it's like, okay, 200, you're paying 250 million, and it's like, theoretically, you have a X amount of years of generating, let's say, at spot gold, 90 million in free cash flow. I mean, that's obviously pretty goddamn impressive. I mean, that's not an expensive company. So I haven't really decided what to do. I'm right now, I'm kind of comparing some juniors, looking at some juniors, producers, like fledgling producers, like Soma Gold and obviously Integra, which I own quite a bit of. Thor Exploration looks interesting. That's Africa, Sierra Madre, and other stuff. And West Red Lake. The one thing, I mean, the danger in a sense that this has been a problematic mine for the last operator because they went bankrupt for probably many different reasons, which have been covered. So it's like, I guess that's also one thing that to keep in mind. That's like, okay, I mean, of course, if you knew 100% they're going to get this into production, it's going to have the exact these costs, and you can just say that, oh, I'm buying 90 million of free cash flow per year for a fully diluted of, let's say, 250 million. I mean, that's a pretty good deal, obviously, especially with the exploration potential and consolidation potential and all of that. I mean, then you're buying a, EV divided by free cash flow. I don't know how much debt they have though, but I don't really remember. But you get my point. I mean, if you could guarantee that these metrics they outlined, they're in fact going to get into production with for that cost, and they are going to have those margins. I mean, then it's obviously very, very cheap, and I do think, I mean, even relatively speaking, because obviously if every other up and coming producer was trading for even less, then West Red Lake might be a no-brainer buy, but still in a vacuum. But compared to the other stories, they are even cheaper, so you wouldn't actually buy it. Again, that's our, I mean, the stock pickers. I mean, we want to own our portfolio. We want it to be the best risk reward you can find, basically within your circle of competence, which in my case is the mining sector. But this is something that's I gotta look into more. There's so many. I mean, again, it's like there's so many stores that look so goddamn cheap, and I don't have endless money. IATA, I mean, they have they gotten their teeth kicked in, as you can see. I mean, it's crazy. I mean, it was actually up to 4. But they have a new management team. They have a new strategy. They plan to, I think, put out economic studies on all their projects. They have debt, and they need to refinance and restructure. So they have debt. So the enterprise value is higher than market cap. I think they might have 100 million in debt. Not exactly sure, but they have ambitious plans. I mean, that's the funny thing with the market. Is like if you look at the projects they have, they're probably worth multiples of the current enterprise value. Then, of course, you have the things like, yes, they might be, but can you get any one of them into production? Or could you theoretically just be stuck there? Let's say nobody wants to buy it, and you can finance and build any one of them. So it's going to be locked up value for the next 10 years or something. Then that's, in a sense, at least in hindsight, a value trap, of course. And I think people are like, right now, everybody knows they need to finance, yada, yada. And of course, the financiers, like if you want to get into a placement and get a half a warrant or full warrant, they have no real interest in seeing the share price go up yet, because they want to get in low, especially if they think this can get into production, and especially if they think their money they're putting in is almost everything that's required to get into production and actually monetizing the value that is in the company. Then you of course want to be a very cheap placement, a cheap placement, and you kind of know that, well, in that case I'm gonna my warrants are gonna be in the money, yada yada, so you're gonna want to take as much of the company as you can at a cheap price with warrants. So that's probably, I guess, what's keeping this subdued for now. But it's interesting that, I mean, if we just fast forward, let's say you bought some shares today. So if you held it for 12 months, let's say we fast forward, jump ahead in time, get here in 12 months, then one could maybe again expect that there would be like 5 studies out. Maybe they raised money and gotten Granite Creek into serious production or something like that. I have to again revisit this case better myself. That's the hard part about there's so many companies that look very cheap at face value. I have no problem owning IATA Gold right now, but the question is this the best buy you can find out there or not? I mean, it's in the US. I think they have 12 million ounces of gold or more, 100 million ounces of silver in Nevada. yada yada. So it's like, I mean, at face value, it's based on the sum of its parts. It should be very, very cheap right now, and a lot of sunk costs. But again, that's what it's not enough to find a buy, if you know what I mean. You're supposed to, okay, I mean, if you think both of these are buys, well, which one is the best buy? Can I have like, I don't know, 1.5% in West Red Lake, 0.5% in I-80? Or are there even other stories that, you know, I have 1.5% in West Red Lake and 0 in I-80 and have some in, you know, add that to Goliath or whatever. I mean, that's the tricky part. And of course, in this sector, there's no such thing as precision. That's why, I mean, you can't really be all in anything because there are no guarantees. But if you think there's a good chance, it's like, I think all of these have, you know, favorable risk reward. In that case, I mean, own a bit of all the companies, you at least have an idea what the risk reward could be. Getting to Stillwater critical minerals, I mean, the interesting thing for Stillwater is, of course, that it's in the US. Huge system, nickel rich, you know, copper rich, PGM rich, etc. And, you know, with the comments of from Trump, which is basically highlighting that it looks like he's very much aware, and his advisors, etc., that resources are the, you know, most strategic things there is. So I don't know what's going. I mean, and he said that I think there was some line that they're going to open up drilling in Alaska, even within like nature refuge or something like that. So I mean, I don't know if that's only for oil and gas or whatever. But the idea is that with Trump getting in, he seems to be much more pro. I mean, oil, gas, and mining and stuff. He seems to be wanting to secure supply, and again, the US has one nickel mine up and running. One for all of the US, they have one. That's the Eagle mine belonging. I think Lundin Mining still owns that. So it's like one mine. No wonder they talk about, you know, acquiring Canada, which at least has, you know, Sudbury and stuff. So I just think it's a very interesting time for American projects, especially critical mineral projects. I would think that, I don't know what, maybe something is cooking behind the scenes, but I would think that there is interest from high up in the US for a project like what Stillwater Critical Minerals has. What's going to play out from that, if there's going to be grants or something. I mean, we already know that $80 billion Glencore is, I think, the biggest shareholder of Stillwater. So we know there's, you know, $1 billion potential in Stillwater. I mean, Glencore is basically saying that because I think they're actually let's see if they're here even. I think this is pounds. I don't know what that is in CAD. Maybe 60. I thought it was like 80. Anyway, a super major basically is backing Stillwater. So I mean, you and Glencore are smart. I mean, there are some who don't like them as investors because they feel like they're predatory and whatnot. But still, I mean, if Glencore is interested, you're at least not. I mean, if you think there's potential in a project, you're not wrong. Silver 47 is one I own, and 1 second. Silver 47 is one I own, and from a pre-IPO. I mean, when it was a private company a long time ago. And then, and I said this in this channel and on I mean my podcast basically, that I wouldn't be surprised to see selling, because people who owned it have been locked up for a long time, and who knows, maybe people who owned it are fed up with the mining sector. So it's like, oh, Okay, Silver 47 started trading. Well, I don't like miners anymore. I'm putting everything in crypto, so I'm gonna sell that regardless. And then we go into tax loss silly season. And I think most of the placements were done at like 80 cents or something. So basically every single placement participator, except for whatever, if there's founders shares and yada yada, but it's like every external capital in a sense would be having a paper loss, and which would open up the possibility for tax loss selling. But now that's obviously over. Well, the season is over at least. And yeah, I think, I mean, this together with Western Alaska are two, I think, high potential, primarily silver plays. They're both polymetallic because there's very few projects that are actually only silver. But they're in good jurisdictions. I mean, Silver 47 is in, I'm pretty sure it's in Alaska, their flagship project right now, right? Yeah, it's Alaska. And the same goes for Western Alaska, which is getting, it appears to be, more pro-mining, well, since it's the US and Trump is getting into office. So yeah, I mean, like a lot of stuff out there. So hey, Silver 47 or Western Alaska, maybe they prove up something that's worth $1 billion, and it's like they're trading for 30 million. So nobody cares, and everybody knows that they're gonna need to raise money. So I don't think neither of these two companies are reflecting the geological potential, etc. But they are reflecting the sentiment, what people think the next news release is, and yada yada. Expecting a financing. First Nordic Metals, of course. I mean, not much to say about it other than, I mean, it seems that Morgan Stanley is has been the main buyer, and I think like the Swedish broker Avanza, I think they mostly trade through Morgan Stanley. So I mean, my hunch is that it's been a large part of the net buying lately are from Swedes. Maybe my article has something to do with that, I would think so. I mean, I know there's some Swedes that have read it, and it makes sense. It kind of proves my point. It's like for the life of me, I cannot figure out how not more people appreciate how absurdly good the risk reward is in First Nordic. I still don't see anybody really talking about it on Twitter. Sure, some people who follow me, but I haven't seen it picked up by any, of the other, let's say, min Twitters or like influence or whatever. Maybe it's because, I mean, they weren't in with warrants or whatever. I don't know what people's criteria are, but it's like, to me, it's like almost a litmus test. I mean, if you read my article where I lay out as much of the case as I possibly can find, and there's a lot of angles to this case in particular. I mean, a unique amount of angles, and partially the reason for that is because of the Swedish angle. And you don't see that this is, what appears to be incredible risk rewards. Like, I have no idea how people think in that case. So it's somewhat surprising. That's like that. But at the same time, I think that just goes to show, again, kind of proves my point. I think people see the headlines like, they see Sweden. It's like, I've never invested in Sweden. Sweden. Never heard of juniors listed in Canada operating in Sweden, except for like District Metals nowadays. So they're like, well, I'm not even going to bother with that, because that means I have to, figure out if Sweden is actually a place to invest, and if Sweden was a place to invest, why aren't there other juniors in Sweden? You know what I mean? So it's like, it's like Sweden has like it was some obscure country in Africa or something, where it's like, okay, I'm not even gonna bother looking into the story because I see what country it is in, despite the fact that it's like Sweden is a tier 1 jurisdiction getting pro-mining, and it used to be a pretty high up on the Fraser Institute before the socialists came in and made it worse. Now they're opening up. I think EU is pressing hard on Sweden to get going when it comes to mining. Just look at the overturn of the uranium moratorium that is coming up, and that was put in place in 2018. I mean, how often do you hear something gets banned and then like 7 years later gets overturned. I mean, and that might be one of the quickest reversals I've ever seen when it comes to something like that. Because it's like one thing to like, oh, we don't really like this kind of stuff like uranium mining, but to actually ban it and then throw it out and actually push for it, that kind of shows you that reality is setting in for the EU, for Brussels basically. But I think that is again one main point, and again that's also a good sign, because okay, if North Americans etc., are like, oh, it's Sweden, I'm not even gonna bother, I'm not even gonna look at it, it's okay, then you don't have that kind of price discovery, because if you actually read the piece, I think I would be surprised if you don't got away with it. It's like, oh wow, this is a remarkable amount of value, plus exploration upside, plus spin-out potential, plus listing arbitrage in one single case. Like all the good stuff, basically, low risk, high reward potential in one case, and that's not really that common. But if you don't even bother because it's Sweden, okay, that leaves money on the table for anybody who does actually bother and figure out that, oh, hey, I mean, Agnico Eagle has been preparing the area for a mine for like 9-10 years, and there's a national interest designation and yada yada yada, pro mining communities, etc. So again, I think this is probably the best risk reward in the gold space I have ever seen. I think so. I'm trying to remember maybe if there was something 2015 or whatever. I think this is, again, I've never seen a combination with this amount of margin of safety and upside potential on top of that, like free optionality in a tier 1 jurisdiction. And still, again, almost nobody's talking about it. So it's probably because of the Swedish, or people are just bad, I don't know. And then you have the fact that, okay, if it's actually Swedes that are doing most of the buying lately, and Jesus, I mean, the volume today is 864. So, I mean, you can see here, for example, I mean, this is like a resistance, so maybe I should use 1 year. So, I mean, this has nothing, obviously, to do with price and value. Why did the price move stop here, stop, same place, same place, same place, same place? Now it's, grinding along these lines. Nothing to do with price versus value. Might be some seller that's like, well, I'm getting out of the mining sector, whatever the reason might be. I mean, I think he's making the worst sells he's probably ever going to do in the mining space. But I mean, somebody sells the low as well. So there's no shortage of people making mistakes in this sector. That's one thing that's for sure. But my point is that we're churning through really good volumes. And whoever, in my opinion, is fucking dumb enough to sell this at this price doesn't have an infinite amount of shares. I mean, me and the family soaked up millions of shares already, okay? They are not coming onto the market anytime soon. So if people who see what I see are buying, they're soaking up 864,000 shares today. And whoever does not see it and is selling, sooner or later, that person obviously runs out. So when he does, and this, resistance line because of some seller breaks, what's going to happen then? I don't know. Could get really fun. I'm talking in circles here. My point is that, yes, you have, I think, a lot of Swedes buying. And again, based on the Jordan Fund's comments, who argue that only 5% of Swedes, and Swedes love to buy stocks. We are the most avid stock market investors in all of Europe, basically. And we also actually do like to invest in mining. But only 5% of Swedes seem to be comfortable buying stocks that are not listed in Sweden. So 95%, if those statistics are, somewhat accurate, 95% of all the Swedish buying is directed to Swedish listed stocks. And it appears that there's still perhaps mainly Swedes that are buying this up. So it's like that means if that's true, it's like 5% or most of the heavy lifting, or like the biggest heavy lifting recently in terms of buying, comes from only 5% of the Swedes that actually buy TSXV listed stocks. So what happens when this gets offered to the other 95% who would like to buy gold in Sweden, but they don't buy Canadian stocks? So think about that. I think this is a good precursor and basically just highlights what I've been saying, that people are not interested because it's in Sweden, so they don't care even looking into how cheap this might be. But Swedes would prefer to buy something in Sweden and are buying because it's in Sweden, or it helps them, you know what I mean? It makes it more appetizing. Sure is true for me, because like I have a huge position. But if I was not Swedish, I don't think I would have this big of a position. First of all, I probably wouldn't have looked into it as deeply as I did, because this is just on a personal level so interesting. I was just... the fact is that I've been dying to invest in Sweden. I invested in District Metals, and that was one of the... well, first of all, it was a really good case, and it's in Sweden. But I don't own any Swedish listed juniors. Because most of them are overvalued anyway, and they're crap companies. But to find like First Nordic, for example, it's like, okay, it's my main commodity, gold. From a risk-reward perspective, thanks to me looking into it, it looks to be ticking more boxes than any junior I've seen in the gold space. It's like, hey, that's obviously great. So that's why it's like, okay, I'm really pushing the gas pedal here. Sierra Madre, one of those, like, well, they were actually in production, not commercial production. But this is one interesting beta/alpha play, probable growth. And the funny thing is, like, when you listen to the interview done by Excelsior, Shadow K report, he did with the CEO Alex, and he said that they plan to potentially double production by 2027 or something like that. It's like when you hear that, like 2027, we just entered 2025, year 2027. It's like it sounds just super boring, if you know what I mean. And that's like, I get that reaction. But they have more. They have a lot of exploration potential and all that. But if you just look at the production and production growth story, if somebody says like, oh yeah, hey, we could double production in 2 years, 2 to 3 years, I think everybody in this space just have their eyes glazed over. It's like by boredom. And that's also the beauty of it. Because if you think about it, let's say it's cheap now based on if they get to commercial production and they have pretty good cash flow and margins and all that. Let's say they make 18 million CAD per year or something, like free cash flow. I'm not saying they will be. I think I did some crude numbers. I don't remember exactly what I came out with. But let's say 18 million. Then it's pretty cheap just based on that, if assuming they can keep that going for, 10 years or something. Because it's a relatively, low production rate. Anyway, imagine if they double that. It's like, okay, let's say silver prices are up a bit, and maybe they make some stuff efficient or more efficient, and like economies of scale. So let's say, just throwing it out there, it's like, oh, by 2027, they're going to be up to 40 million in free cash flow per year. Assume we jump 2-3 years ahead, and they have the quarterly report comes out. It's like, yes, 10 million free cash flow this quarter. And so you're like, okay, that's 40 million per year. And you bought it. Let's say they do some financing. Let's round it up to 80 million. So it's like, well, that's an EV. Today's EV of like 80 million divided by 40 is like 2 in EV. Well, they have some debt, actually. So let's say 85 divided by 40, for example. That's EV free cash flow ratio 2. Obviously, it's not going to be trading at 85 million if they're doing 40 million in cash flow. So then when you think about it, it's like, hey, maybe they're priced at 500 million if that happens, if they're able to do that. Then you start to think like, hey, 2-3 years, for let's say a 400% return. That's insane. I mean, that's very, very good compounding, insane compounding, of course. Then all of a sudden, when you think about it, it's like, well, 2-3 years for that kind of return, that's a no-brainer. A, you can't guarantee that, of course. B, there's also potential upside from exploration, whatever, so you don't know exactly what's going to happen. But then it's funny. It's like when you hear it's like your first response is like, oh, 2027. Like who can wait for that? But that's back to the point, because if that was a base case, like, oh, you're going to get 400% over 3 years, let's say, insane returns, right? Absolutely insane. I mean, most people, or the market average is 9% per year. 400%, absolutely spectacular. If you could find cases like that where you get 400% every 3 years, boom, you're going to be richer than Warren Buffett. Unfortunately, those don't come around so often. Point is, when you think about it, it's like, okay, yes, then we go back to what I recently ranted about, the patience arbitrage or value proposition or whatever you want to call it. Like I'm exchanging the patience. Like, hey, I can. Let's say you're one of few who can wait 3 years. If you're able, if you can look that far ahead, it's like, oh, I'm gonna buy this, and literally do nothing but hold, and you could come back in 3 years. I mean, you have to look at news releases, and I mean, the case might change along the way for better or for worse, and you should do adjustments. But it's like a base case. Let's say we pretend our base case is, I'm accepting this risk reward, I'm buying this, and then I'm not going to look at a portfolio for 3 years. That's very few who can do that. And that's also why it's like, if the market assumed that would happen rationally, if it should be pricing in the fact that they would be throwing off 40 million in cash flow in 3 years, for example, and then it should be trading higher than this already, right? Because it's kind of an insane return to get 400% over 3 years. But it's uncertain for first of all, and of course, again, the main point is that it's too far out for the market to care about. But if you care about it today and you do nothing but hold, there's theoretically that possibility that you'll wake up 3 years from now not doing anything except hold, and you'll be up 400%. Etc. I just want to point that out. It's like I'm affected by it too, the impatience. Mawson Gold. So they're about to spin out uranium assets, and I think they're gonna change their name to Southern Cross Gold, because the main asset of Mawson is actually the gold project in Australia, which looks absolutely stellar. And that's the interesting part, that I don't know what kind of valuation the uranium assets will get, but I think I remember hearing that they had, when they were only about uranium in Sweden, they went before the moratorium, I think also at lower uranium prices, not 100% sure, but I think the uranium prices are pretty high now. They had like a market cap up to 100 to 200 million. Is that reflected, or is like, what's going to happen? How much are you going to get out of the spin out? How much? What value is that going to fetch? Is it going to fetch 40 million? Maybe, I don't know. 30 million, 20, I don't know. What could it fetch? I don't know either. But this is an interesting thing, because again, I think we can kind of assume that, again, nobody gives a shit about Sweden, especially. I don't think any like Canadians read this and it's like, oh, I get a spin out of uranium assets in Sweden. And maybe they do some quick research like uranium mining is banned in Sweden. So I don't know how much is priced in, for the spin out. So I think the cutoff date is January 10th, so that would be Friday, I think. So I'm contemplating adding to capture that spin out. I just wanted to throw it out there that there might be no guarantees, but still, I mean, their asset in Australia is kind of world class, so it's not like you're making a mistake, I don't think. I mean, let's put it like this. I don't think we're risking much. The question is, I mean, how much extra arbitrage is there because of the spin out? I mean, if the spin out is going to become a 100 million market cap company within 6 to 12 months, then obviously this is probably super cheap, because then you get, let's say, you get 50 to 100 million back on your investment. So I mean, then you could say it's a 50 to 100 million discount on the Southern Cross project. So maybe it's fair value, they're cheap already, but it's like, okay, if I get it for 250 or 200 million, their stake in the Southern Cross asset, in light of the uranium spin out, all of a sudden this might be a no-brainer opportunity. I'm not saying it is. Anyway, talked a lot already, covered some ground. I'm gonna try to be more like proactive. Obviously, it's hard to go in really into depth if I'm gonna talk about a lot of companies. But this is, I mean, to me, this is a buffet right now in the market. I have way more stocks I would like to buy, more companies I would like to own more of, increase my ownership of those assets than I have dry powder. And I don't think you really need to be that concentrated right now, because I think there's so many interesting value propositions out there. So sure, if you do a very concentrated portfolio, you might actually have even better returns. But I think it's a pretty good, let's say, opportunity to, I mean, if there's enough cheap stuff that you can simply, let's say be diversified and own 30 cheap juniors, and it's like you're kind of, I mean, diversifying away the company risk, and still, I mean, yes, you might not get 400 to 500%, which you could have if you only had, like, I don't know, 5 of your absolutely highest conviction picks. But if you get like 200-300% base case on a very diversified portfolio, that's not bad actually. And especially in this world where it's like geopolitical risk and yada yada. So if you can spread around the risk in jurisdictions, can spread around the risk in terms of the types of metals, etc. Hey, I'd rather be somewhat right than exactly wrong. That's the name of the game, I think. Not investing advice. Consider me biased. With all the company. I think I own all the companies I mentioned, or most of them. Some might be banner sponsors as well. Twice biased. Not investing advice. Not buy and sell recommendation. I assume I might buy or sell any of these stocks at any point in time without notice. So don't. Again, I'm not going to be holding everyone's hand all the time. It's like, it's up to you to make decisions, because it's your portfolio, right? And if you don't have conviction, you're just going to shoot yourself in the foot anyway. Thanks for listening. Bye bye.